Welcome to Earnings Central. In this video, we'll break down UnitedHealth Group's first quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q1 was $111.6 billion. The company actually reported revenue of $109.6 billion, missing expectations by 1.8%. However, this quarterly revenue marked a 9.8% increase compared to the $99.8 billion reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q1 was $7.29. The company actually reported an EPS of $7.20, falling short of expectations by 1.2%. However, this result reflects a 4.2% increase compared to the $6.91 per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. Despite the challenges I'll discuss shortly, UnitedHealth Group continues to show strong growth in key areas. The company is on track to add approximately 800,000 new Medicare Advantage members in 2025, demonstrating the continued appeal of its Medicare offerings. This encompasses growth across individual Medicare Advantage plans, group Medicare Advantage, and dual special needs plans. CEO Andrew Whitty highlighted this as evidence of the company's long-standing commitment to stability and differentiated value in this important market segment. One of the most important metrics investors watch is the medical loss ratio, or MLR, which represents the percentage of premium dollars spent on medical care. UnitedHealth now projects an MLR of 87.5% for 2025, plus or minus 50 basis points. This represents a significant increase from previous expectations, with the company expecting the first half of the year to be below the midpoint and the second half above. This higher MLR directly impacts profitability and contributed to the revised earnings outlook. A major factor driving the higher MLR was unexpected growth in healthcare utilization. The company had planned for 2025 care activity to increase at a rate consistent with what they saw in 2024. Instead, Q1 indications suggest care activity increased at twice that rate, particularly in physician and outpatient services. This increase was specifically concentrated in the Medicare Advantage business, not affecting commercial or Medicaid segments. As CFO John Rex noted, percentage increases in care activity, about double last year's level, significantly impacted financial performance. Despite challenges in other segments, OptumRx, the company's pharmacy benefit management division, performed strongly, with revenues growing 14% to exceed $35 billion for the quarter. This growth was driven by both high customer retention and new customer wins, resulting in script growth of 3%. The company has also continued to innovate in this space, announcing the removal of prior authorizations on 80 drugs and aligning pharmacy payment models more closely to their actual costs. UnitedHealth's Medicaid business also showed positive momentum, with membership increasing to 7.6 million members. The company noted growth with recent service expansions in Kentucky, New York, and Florida. Management expressed encouragement about updated Medicaid rates in 2025 that more closely align with underlying member acuity, though they noted funding remains insufficient to fully meet patient health needs. The company's commercial self-funded membership increased by approximately 700,000 members in the first quarter, reflecting continued strong product innovation. This growth was partially offset by attrition in commercial insured membership, particularly in individual exchange products, where the company maintained its disciplined pricing approach. Now, let's shift focus to some of the key insights and takeaways from the earnings call. The most significant news was UnitedHealth's revised earnings outlook. The company lowered its 2025 adjusted earnings per share guidance from previous estimates to a new range of $26 to $26.50. CEO Andrew Whitty described the performance as unusual and unacceptable, citing specific issues in the Medicare business that created this unexpected pressure. An interesting insight from the call was the correlation between higher Medicare Advantage premiums and increased utilization. Due to Medicare funding cuts, many seniors, especially in group plans, saw significant premium increases, in some cases from $50 to $200. Management observed that these higher out-of-pocket costs appeared to drive consumers to use more services to get their money's worth. This created a utilization spike, particularly in wellness visits followed by specialty care referrals. One of the major challenges for OptumHealth involved the profile of new Medicare patients. The company explained that many new patients came from plans that exited markets. These patients experienced what UnitedHealth described as a surprising lack of engagement last year, which led to 2025 reimbursement levels well below expectations and likely not reflective of their actual health status. Management believes this issue is addressable, but will take time to resolve. The company acknowledged difficulties in transitioning to the new CMS risk model, known as V28. Management admitted they underestimated the impact of V28, particularly as it relates to higher acuity patients who are more affected by the model changes. CFO John Rex noted, transitioning to a new model and concurrently running two distinct versions has been more operationally complex than anticipated. Despite these short-term challenges, UnitedHealth executives repeatedly emphasized their continued commitment to the value-based care strategy. Andrew Whitty stressed that the fundamental model remains sound and that what they're seeing are second-order derivative effects of a significant pricing change rather than flaws in the value-based approach itself. OptumHealth is still on track to add 650,000 new value-based care patients this year, bringing their total to approximately 5.4 million by year-end. The company outlined several initiatives to address these challenges. These include ensuring complex patients most impacted by Medicare funding cuts engage in clinical programs, consistently engaging members in their homes and post-discharge settings, improving health status assessments for new patients, investing in physician clinical workflow improvements, and adjusting 2026 Medicare Advantage plan designs and pricing. That wraps up our recap of UnitedHealth Group's first quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.